Okay, hello and good morning, everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 18th of March 2019, so welcome everyone. Welcome to this Monday's morning session where we're gonna have a look at the markets, a few of the charts. So yep, the usual stuff. So I hope you're all feeling nice and relaxed after the weekend. So yep, and ready for another busy week here in the markets. So before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then guys, let's quickly jump into the charts. Now the first one I want to touch on here is the FTSE100. Now looking at this chart here, looking at this 4-hour chart, you can see that the last Friday closed below this key area of resistance near the 7,245 level. Now in a way, if you want, you could in a way round it up towards the 50 just for the sake of it, but still, nevertheless, this is the area that we're going to be keeping a close eye on, because this is going to be that gateway. This could be that gateway towards higher areas. So a nice good push above the 7,250 level could open the path towards higher areas. Now, if we look at the cash index right now, it is already slightly above this barrier right here, the 7,250, because it's currently trading at around 7,255, so just by 5 points higher. Let's see if it actually manages to kind of maintain that strength, and if we could see potentially this one traveling further up here. Now initially, of course, we will target the 7,300 level, but just above that we do have the 7,330, which previously acted as also a very good area of resistance, and I'm talking here between around the 12th of September and the 18th of September. So for about a week it acted as it held the price down. So for now, guys, be very careful with this one, and again, continue observing the 7,250 level, because if we see a nice continuation here to the upside from it, then yep, we could then target the 7,300 or the 7,330. If suddenly this decides to remain below the 7,250 level, of course, still not all is lost for the bulls. Of course, we could see maybe this one traveling a little bit lower, but for us, let's say, to get slightly more comfortable with the downside, at least in the short run, and let me just adjust this level, because this is going to be a bit irrelevant now. The level that we're going to be keeping close eye on will be this one right here at around 7,185 zone, approximately there, which also, if we see a break below that, could also place the index back below the pivot, below. So that would be very interesting to see where it's going to travel to. But again, and I'm talking about, of course, the pivot of Friday here, but basically keep your eyes on the 7,185 level. A nice good drop below this could lead towards the 7,150 area, which also acted as a very nice area of support here back on the 13th of March. And to be honest, if that fails to withhold, now it would be really interesting to see maybe a retest of this upside support line that has been running here from the lows of the 27th of December. So in a way, if we let me just put a few arrows here for our future reference. So in a way, in terms of the downside, what we're looking at here is the 7,185 zone. A nice good drop below that could potentially lead towards further declines, maybe even towards this upside support line. But if this gets broken here, or should I say if this continues to travel above, because like I said, looking at the cash index right now, it is already trading above the 7,250 level, and if it remains here, then yep, it could be targeting the 7,300 and then the 7,330 level. So keep your eyes on that one. Jumping into WTI now, I was talking about this one in one of my previous videos last week. So basically we had a nice push here through the 57.85 barrier, managed to travel higher, but then it sold off, but it tested again the 57.85 level from above, but kind of failed to close below it, and you can see that today is currently balancing around the pivot. Of course, you can see the arrow that I've got here, the curved arrow. Basically, this is the scenario that we're still keeping a close eye on, because this might travel back down again, and if it fails again to close below this 57.85 level, we could see the bulls jumping back in here and potentially driving this one higher again. We will target this 59.25 level, but from the very short-term perspective, of course, initially we will target this 58.80, which was near the highs of last week. So basically, if we see a rebound from this level here, from the 57.85, keep your eyes initially, of course, on the highs of near the highs of last week, around the 58.80. But if that fails to withhold, then yep, the next target for us is the 59.25, and that's in terms of the short-term scenario, a short-term upside scenario. In terms of the downside, yep, if we need to see basically a nice good close here below the 57.85 level, and only then we will target lower areas like the 56.70, and if that gets broken, now this could turn out to be quite ugly for WTI, as it could open the path towards lower areas, or even actually this key area of support that we're keeping a close eye on, and that's around the 55 zone. So keep your eyes on that one. But again, for now, what we're going to do here is we're going to observe these key breakout levels. So in terms of the upside here, if you want to be on a little bit more on the cautious side, you could in a way wait until this travels towards the 58.80 and then see if it actually starts breaking it or not. If it starts breaking it, then yep, this could increase the chances for WTI to travel higher. But if this decides to break below and closes below the 57.85, yep, start looking at the downside. Ethereum. Now, this is a bit of a tricky one, because as you can see from the chart here, it's kind of continues to trade roughly between these two levels here, on the downside the 129, and on the upside the 140, 141, approximately there, of course with a few overshoots here. For now, we're just gonna continue observing this and wait for a strong break, because like I said, it continues to range here a little bit. Of course, we did have a nice break here in the beginning of March, break below the 129 level, which kind of led towards the 122.50 area approximately there. And by the way, I'm looking at the Kraken exchange here, so that's why, guys, for now it's probably better to continue observing it, because even though yes, we did move away from its lows here that we saw here back in December, you could in a way also draw something like this. Let me just quickly put that on the chart. Could draw in a way something like this. So this upside support line that's taken from the lows of December last year, basically in a way, because until it's trading here within this range, it's difficult to say exactly where it will go. Even if it drops, let's say below the 129 level again, then we will target this 122.50 area. But if that gets broken, then yep, this upside support line could come into play. It could potentially hold the price from dropping lower. But if of course, if this crypto gets to this point, we'll just reevaluate it here and see if it wants to hold on to it or not. But if this decides not to travel lower here and decides to pop above the 140 level, of course the 150, the psychological 150, will be that next area of potential resistance. And of course, if that fails to withhold, then yep, we could in a way see this one traveling back up here towards the highs of February, which were around the 165 level. So for now, be very cautious. This is something just for you to keep on on radar. We are still waiting for this to kind of make a move here, a decent move out of this little range here. So that, yep, guys, keep your eyes on it and continue observing the price action. Let's jump into a few pairs now. So GBPUSD. Now this is, of course, after a very volatile last week. You can see how crazy that was. It kind of calmed down a little bit right now. So for now, of course, we will continue monitoring it carefully this week, because we do have the another vote in the UK Parliament that's coming on Wednesday. Yep, so basically we might see this one a bit of a being sluggish. Potentially, of course, could be a little bit of a drag, but unless the on Tuesday we see some sort of better movement here when the unemployment rate is going to come out. So yep, for now, guys, be very cautious with this one. It is very volatile, and what you could do here is keep a close eye on some of these key support and resistance levels. So basically, you can see that the pair is currently balancing around this 132.85 level, but it's kind of, to be honest, it broke it, then dropped below it. So in a way, we can say that this is a bit irrelevant now. What we're going to do here is we're going to keep an eye on the 133.50 on the upside, and I do understand it's quite a bit of a move here from where the rate is right now, but to be honest, it's better to be safe than sorry, because if we see a nice good pop above the 133.50, this could potentially open the path towards slightly higher areas, and the next area that we're going to be keeping a close eye on is, of course, is the 134.75. and just to kind of show you what that level was in the past, and that was it was the highest point of June 2018. So basically, a nice big pop above the 133.50 could potentially lead towards that this level here, the 134.75. But if this decides to travel lower, and if, for example, today, if we see this one traveling below the pivot, what we're going to target is this 132.20 zone, approximately there, which previously acted as a good area of support and good area of resistance. And if we see a drop below that and a good firm break here below the 132.20, then yep, we could potentially see a further slide lower. Now, in terms of finding a good potential area of support here, it would be a bit difficult given the swings that we had here last week. So in a way, we're going to focus on some of these EMAs here, but the main one, of course, for us is going to be this 200 EMA. So in a way, if we see a drop below the 132.20, we will target this 200 EMA, which could, by the time, let's say, if it travels lower, could be around here somewhere, and the area here could be around the 131 zone. Just to kind of quickly put that on our chart just for our future reference, something like this, basically, guys. So the 131 area could be that little next target for us if we see a drop below the 132.20 zone. So keep your eyes on this one. And like I said, this is very this is going to be very interesting to watch how the pound is going to react, especially coming on Wednesday. USDJPY, certainly this one's a bit of a drag here, and especially last week we saw this. Yes, we saw it pushing higher, but kind of failed to get back above the 111.85 zone, from which you can see it kind of reversed and traveled lower. Today it's already trading below the pivot, which is a slightly bearish indication, let's say. And of course, for us this is a bit of a just wait and see what happens. The pair, if we see a drop below the subside support line that has been running here from the lows of the 3rd of January, then probably something could be more attractive here in terms of trade wise, of course. But for now, again, we're just going to continue observing this. If this decides to pop above the 111.85 level, then yes, we could then target this 112.10 area, approximately there. But if that fails to withhold, now this is where it could become a little bit more exciting for the bulls, as this could potentially open the path towards slightly higher levels like the 112.20 or the 112.65 zone. So, and the 112.65 marks the high of the 19th of December last year. So that's why, guys, keep your eyes on this level right here, the 112.10. A nice good pop above this could lead towards higher areas. On the downside, as I've already mentioned, we need to see a nice good drop below the a nice good break initially, of course, below the subside support line, and then we will target lower areas like the 110.90, which coincides with the 200 EMA. But if that fails, then yep, the next potential target could be around the 110.63, approximately there, marked by the lows of the 28th of February, or even actually going further down towards the 110.40 zone, approximately there. So yep, for now, guys, of course, the main thing for the downside is to wait until we get in this nice break here below the subside support line. So keep your eyes on that one. And the last pair I wanted to quickly touch on, and that's euro dollar. Now this one is a bit of a tricky one. Of course, last week we had this nice fantastic move higher and gained approximately around 90 pips, something like that. Today already you can see that it's trading well above its pivot. It has already tested the R1, which is around the 113.45 level, but of course, slightly above that, we do have this 113.50 level, which is a nice round number here. So basically, what we're going to do here is a nice good pop above the 113.50, could potentially lead this one a little bit higher. Now, in terms of the higher areas, the upside could be slightly limited due to this downside resistance line. Now, don't get me wrong, it's a bit of a tentative one. This downside resistance line is taken from the 10th of January, but still something for us to kind of keep in mind, because if this decides to travel higher but fails to get above the this downside resistance line, now we could see maybe the bears jumping in again here and potentially driving this one back down. So something like this could be possible. So in a way, guys, initially, of course, if we see a nice pop above the 113.50, keep your eyes on this downside resistance line. If it holds, we could see the rate sliding back down towards the 113.50 again, this time testing it from above. And of course, if it fails to withhold, then yep, further declines could be possible, maybe back down towards the 113.25. But initially, of course, we're not going to kind of go too far on this one. First, what we're going to do is going to keep an eye on the 113.50. If we see a nice pop here, then we will target this downside resistance line. If the downside resistance line kind of fails to withhold this this bull pressure, then keep your eyes on the I wouldn't say the psychological, but still a very important 114 level. So area, even like that, I would say a nice good move above the 114, of course, could drag this one a little bit higher towards the 114.20 zone, where the pair spiked, or should I say peaked, on the 28th of February. So that the 114.20 could be that breaking point, which would allow this which would allow euro dollar to travel further up. We'll then target the 114.50, or even actually the psychological 115 level. So, but basically, long story short, guys, for now, of course, if this decides to travel further up, yep, we're keeping a close eye on this downside resistance line. If it fails to withhold the bulls, then we will start looking at potentially higher areas. But again, for a better confirmation, we would like to see a nice good push above the 114.20 zone, and only then we will target higher areas. So for now, guys, keep your eyes on the price action. Let's see how this is going to play out today, or actually even this week. So but this is very interesting, especially on this euro dollar. This is going to be very interesting to see what it wants to do near this this downside resistance line. So again, tentative, but could play out nicely. Okay, guys, I hope you have a wonderful trading day today. If you want to join me later on at my trader's tea time, and that's 14:15 GMT time, as always. But for now, I hope you have a wonderful day, and I'll see you later. Bye-bye.